Whenever people hear the word safe investment, they usually think of something boring, something slow, something that won't make them rich. But safety in investing isn't about excitement, it's about survival. It's about protecting your money in a world that keeps changing faster than most people can react. Going into 2026, uncertainty is not disappearing. Interest rates move unpredictably, markets react to global news instantly. Technology disrupts jobs, inflation pressures still exist. In this kind of environment, the safest investment isn't something that promises huge returns overnight. The safest investment is the one that protects your purchasing power while giving you steady, reliable growth. The biggest mistake many investors make is confusing safety with cash. Holding large amounts of cash feels safe because the number doesn't go down. But quietly, its value does. Inflation doesn't announce itself, it slowly reduces what your money can buy. So the safest investment in 2026 is not hiding money, it's positioning money where it can survive inflation and volatility at the same time. Historically, the safest long-term investments have shared a few qualities. They are diversified, they are backed by real economic activity, they don't depend on predicting the future, and they reward patience more than timing. This is why broad market index funds remain one of the safest choices for most people. They spread risk across hundreds of companies instead of betting on one winner. Even when individual businesses fail, the overall system keeps moving forward. Government-backed instruments also play an important role in safety. Treasury bonds, bills, and inflation-protected securities exist for a reason. They don't make you rich, but they protect capital and provide stability when markets are shaky. In uncertain years, safety often comes from balance, not extremes. Another underrated safe investment is skill-based investing. Investing in yourself. Skills that increase income, adaptability, and relevance don't crash like markets, they compound over time. When you can earn more, save more, and invest more consistently, your financial safety improves regardless of market conditions. Real assets also matter. Assets tied to real-world value, such as productive businesses, real estate and stable markets, and essential services, tend to hold value better during uncertainty. Safety doesn't mean zero fluctuation, it means long-term resilience. The truth most people don't like hearing is that there is no single perfect safe investment. Safety comes from diversification, discipline, and time. People who panic, chase trends, or overreact usually lose money. People who stay consistent, balanced, and patient usually survive, and often win. In 2026, the safest investors won't be the smartest or the fastest, they'll be the calmest. They'll focus on steady contributions, diversified assets, controlled risk, and long-term thinking. Safety isn't about avoiding movement, it's about choosing investments that can move forward without breaking when the world shakes. The safest investment isn't a secret product or a viral trend, it's a strategy, one built on patience, balance, and understanding how money actually grows over time.